Good morning. It's Wednesday, the 3rd of July, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. The Take. At what point do you decide that it's not worth fighting a rising tide and instead jump into the river and, float along with it? Well, as far as small cap stocks go in the stock markets, this is evidently the time. At least one mutual fund that I can see, Kotak Mutual Fund, whose group is also in the news for other reasons I'll come to shortly, has succumbed. Kotak Mutual Fund has written to investors saying it's resuming subscription of units in the Kotak Small Cap Fund effective the 2nd of July. That's yesterday. Parent Kotak Mahindra Asset Management Company had earlier announced restrictions on lump sum investments in its small cap funds as of March 4th. That's 3 months ago. What could and would have continued is obviously the systematic investment plans. Now, in the last 3 months that these restrictions were in place, the small cap index has gone through the roof once again, actually. And according to one calculation by CNBC TV18, almost 15%. Now, at this level, presumably, the mutual fund managers, who are also human, felt that it was pointless to resist or lose out to further appreciation in the market. Kotak also has justifications lined up. It says political uncertainty around India's elections is behind us, and this has reduced market volatility, making the market more stable for small cap stocks. Now, I did think that small cap stocks were untrustworthy in a manner of speaking because their valuations were high and in many cases grossly inflated, also being why the Securities and Exchange Board of India, or SEBI, asked mutual funds to run stress tests to see if they could meet sudden redemption pressures in these small cap funds. Anyways, Kotak says it believes the earnings growth of small caps is expected to improve and companies are poised for robust earnings growth. As the economy continues to expand, smaller businesses are well positioned to benefit, potentially supporting their valuations. All of this is, of course, Kotak Mutual Fund saying, I broadly agree that smaller businesses will grow. Actually, anyone and everyone will agree with that. But to what extent such high valuations support this, I'm less sure. And then the statutory warning. Kotak says it's important to set realistic expectations and that the returns seen recently are unlikely to continue at the same pace and may become more normalized, and hence to avoid the temptation to over-allocate based on recent performance. So here we are in July with all indices roaring away with no end to supply of fresh funds into the market, both domestic and international. Kotak's own broking arm, that's Kotak Securities, has been more sanguine on small cap and mid cap funds or stocks, and pointing out the dangers of investing too much or too high. Be that as it all may, it's never too late to remind ourselves that markets are for the long term. And then our top stories and themes for the day. The stock markets are hitting fresh highs once again, but financials or financial stocks are dragging. The monsoons now cover all of India ahead of time. Oil prices are at a 2-month high, understanding the Americas factor. And how Tesla's car sales are continuing to fall.
This is the Core Report with Govindraj Ethiraj.
The markets hit fresh highs, and they were strong again, inching closer to the 80,000 mark, and the Sensex hit a new high of 79,856, and finally ending about 35 points lower at 79,441. The NSE Nifty 50 index hit a new high of 24,236 and eventually closed with a 18-point fall at 24,124. Business Standard reported that Larsen Toubro gained about 3% amidst buzz of an order win from Saudi Aramco. I don't know if it's the same one, but we did speak yesterday of Aramco's $25 billion gas expansion project locally. The BSE Midcap and Small Cap indices did not show much change, though one being slightly down and the other slightly up. Financial-linked stocks like banks, financial services and private banks lost slightly, but they had gained 7 to 8% in June, Reuters reported, quoting analysts saying that financial and banks' recent outperformance as compared to the benchmarks has likely hit a pause. How not to run an investigation. The Securities and Exchange Board of India, or SEBI, sent a notice to Hindenburg, the short-selling research house based in the United States, which does not sit in India or has any known affiliation, at least known to us. Hindenburg, in turn, responded with a letter or blog post which effectively says, "Are you kidding me?" US-based Hindenburg Research and said that it received a show cause notice from SEBI regarding its Adani report, which came last year, And the firm said so in a post on its blog on July 2nd, that's yesterday. The 46-page show cause notice was apparently delivered on June 27th, according to Hindenburg, and the response obviously is pretty quick. In its blog post, Hindenburg said the research firm was short on Adani shares through a deal with an investor partner who was indirectly short Adani derivatives through a non-Indian offshore fund structure. Now, all of this sounds a little complicated, but here is where it becomes interesting. Hindenburg then proceeded to name Kotak Mahindra Bank as having overseen an offshore fund structure used by the investor partner of US-based Hindenburg to short Adani stocks. Hindenburg then questioned why SEBI failed to name Kotak Bank in its observations. Hindenburg said, and I quote, "While SEBI seemingly tied itself in knots to claim jurisdiction over us, its notice conspicuously failed to name the party that has an actual tie to India. Kotak Bank, one of India's largest banks and brokerage firms founded by Uday Kotak, which created and oversaw the offshore fund structure used by an investor partner, or rather our investor partner, to bet against Adani. Instead, it simply named the K India Opportunities Fund and masked the Kotak name with the acronym KMIL," Hindenburg said. Now, Kotak Mahindra Group responded swiftly, a move which also stabilized Kotak Bank's slipping stock price by telling, among others, Money Control that Hindenburg was never a client of the two entities associated with the K India Opportunities Fund or Kotak Mahindra International Limited, and that the fund was not aware that Hindenburg was a partner of any of its investors, all of which is very likely, but is not exactly the point that Hindenburg is making. On Jan 24th, 2023, that's obviously more than a year and a half ago now, Hindenburg Research published a report accusing Adani Group companies of stock manipulation and accounting fraud ahead of a proposed 20,000 crore rupee IPO by Adani Enterprises. The conglomerate termed the report as malicious and baseless. Adani, of course, has since then been given a series of clean chits in India, including by the Supreme Court. The Adani Group also accused Hindenburg of all kinds of conspiracies, though Hindenburg has steadfastly maintained that it was always a short seller and its path to short selling was to blow apart balance sheets of companies it found wanting, as it has done for other companies in the United States elsewhere as well. Now, SEBI's letter to Hindenburg is, of course, strange and is obviously more to demonstrate that it's doing its job by sending notices to one and all. The optics of this move are a little unfortunate, though. SEBI, to its credit, has moved on trying to bring in or induce greater transparency of overseas shell companies that invest in Indian entities like the ones in Adani. Perhaps that's the best outcome that one could expect or emerge from this case. The monsoons are in good speed. India's 2024 monsoons have now covered the entire country on Tuesday, 6 days ahead of the usual time of arrival, Reuters quoted the Indian Meteorological Department, or IMD, saying, adding that although rain totals are still 7% below average so far this season. In a normal year, rains hit Kerala in the southwestern part of India around June the 1st and then begin their move northwards and upwards to cover the whole country by the 8th of July. They usually hit Mumbai in the second week of June. The rains, as we've been mentioning, are important for cropping and equally, or sometimes more importantly, for overall economic sentiment. If you like what you are listening to and would like to collaborate with us at The Core Report, here's some good news. We are happy to announce the launch of the Core Brand Studio. Write into my colleague Shiva Chaudhary at shiva@thecore.in. I repeat, Shiva, that's SHIVA, at thecore, THECORE.in for more information. Oil prices are rising again. Crude is now trading near a 2-month high thanks to an escalation in tensions in the Middle East and concerns over the rapid start to the Atlantic hurricane season, according to Bloomberg. Brent crude is now trading near $87 a barrel after it rose on Monday. In the Americas, Hurricane Beryl is intensifying as it churns through the Caribbean, threatening flooding rains and storm surges. According to Bloomberg, which also quoted experts saying it's unlikely the storm would hit U.S. oil operations in the Gulf of Mexico, but there was still a chance of disruption later this week. Such a severe storm this early in the year may portend a serious hurricane season to come, which could halt offshore production or even disrupt refinery operations in the Gulf Coast and subsequently drive prices up. To get a sense on the overall supply dynamics on oil and how the market was looking right now and in coming months, I reached out to Vandana Hari, founder of the Singapore-based energy intelligence firm Vandana Insights, and I began by asking her how she was seeing prices which were rising right now.
Let's talk about the fundamentals first. So on the demand hand, it is summer season in the Northern Hemisphere, a time of the year when demand typically goes up. People are traveling more, typically the holiday season. So gasoline demand goes and jet fuel demand as well. Now, that has been the expectation, especially on the jet fuel side, because early summer data appears to be indicating both in the US and Europe that air travel will jump even more strongly this year on an annual basis than what we've seen in the post-COVID recovery period. Now, however, I think it's important to keep that in perspective. So jet fuel demand as a ratio of global oil demand is just about 7%. So it's equally important to keep an eye on what trends we are seeing in gasoline and diesel. And then I feel the oil bulls might be overestimating slightly, not really paying attention to what I would call quite sluggish consumption for both gasoline and diesel. So gasoline for driving on either side of the Atlantic. And diesel, is really depends on what industrial activity is doing. So, that and the movement of goods and so on. So that's your demand picture. On the supply side, nothing has changed in terms of OPEC Plus. As we know, they are continuing with their current production targets and cuts until the end of September. But I think a couple of other factors are worth noting. One is the US production being vulnerable to the Atlantic hurricane season. And I think the market is a little more on its guard this time than every year, this time of the year during the hurricane season, because the prediction is that it will be the strongest ever hurricane season that the US has ever seen. So we're talking about close to 1.8 million barrels per day of oil production, offshore oil production in the US Gulf of Mexico. Before the approach of a hurricane in that direction, there's some preventive shutdowns. And then, of course, if there is infrastructural damage, then that ends up shutting in production for a longer period of time. So those are the things. Geopolitical risk, again, I feel it's probably being overstated a little bit because we are more than 9 months into the Gaza crisis now, right? And we have seen that all said and done, at the end of the day, Israel, as well as the regional powers, Iran included, and the other Middle Eastern powers have shown considerable restraint. Things haven't spiraled out of control. So yes, there is now more tensions with Iran, more tensions with Hezbollah militants in the north, in Lebanon. But at the end of the day, I guess it's natural for the market to have some risk premium, but I think it's probably overdone a little bit.
Right. So, of all the factors that you mentioned, and you said that the geopolitical part has now been there for 8 months, the other two factors that you talked about, jet fuel demand, which is of course stronger, summer, which of course comes every year. Now, what is different perhaps seems to be hurricanes and the fact that it could affect US production. So, give us a sense on what are the proportions that could be affected.
Yeah, so in terms of the hurricane season, it's typically officially starts in June and goes on until November. The really intense part of the hurricane season typically is over July to end August or maybe a little bit into September. This time we have Hurricane Beryl, which reached category 4 storm, which is pretty high. And it made landfall in the Caribbean islands, but unusually it has, typically it sort of peters out after landfall. But this one has continued to pack a lot of strength and it's expected to move into the Gulf of Mexico by the end of this week. So basically what the market is prepared for this time is we don't know what to expect, given that we've been told that it's going to be an unusually active, unusually strong hurricane season. So I think to some extent, the market will probably be keeping a closer eye on every single storm than what you would normally find at this time of the year. So I mentioned earlier the upstream production, and as the hurricane moves inland, you also have to look at the refining capacity in Texas and Louisiana, which is about 8 million barrels per day, considerable refining capacity as well. So hurricanes have the potential to threaten upstream oil production as well as refining.
Right. And why is the US so important in setting the direction of global price trends in general and specific?
So if you look at the oil consumption, it is the single largest consumer. And, China number 2 is not far behind, but the US still remains the biggest consumer at, close to 18 million barrels per day. And then I think to some extent, it's also the US, how the US economy is doing, what is the outlook for US growth, for the outlook for what the Fed is likely to do with interest rates. All of that also has sort of a second tier impact, if you will, on oil, because depending on how confident investors feel about the US economy, then that serves as a proxy for US oil demand and to some extent for the general health of the global economy and global oil demand as well.
Right, Vandana, thank you so much for joining me.
Thank you very much, Govind.
Tesla's car sales continue to fall. Tesla's vehicle sales fell for the second straight quarter this year as the world's largest electric vehicle maker contends with lukewarm demand for its cars and intensifying competition from rivals, according to the Wall Street Journal. Tesla said it delivered around 444,000 vehicles globally in the 3-month period. This was a roughly 5% decline from the same quarter a year ago. Analysts had expected Tesla to deliver about 436,000 units, according to FactSet quoted by Wall Street Journal. So Tesla is no longer growing as rapidly as it did in recent years, thanks also to the fact that there is stiff competition from the Chinese brands, including the big ones like BYD. Moreover, demand has fallen short of initial expectations despite falling prices and a spurt of low interest and lease deals, says the Wall Street Journal, which also added that Tesla's fleet of vehicles is aging, with its most popular vehicle, the Model Y SUV, now approaching 5 years old, a time when traditional car companies usually make major design changes to boost demand. Tesla is also ramping up production of an updated Model 3 sedan. And China, of course, is where Tesla is taking a real beating, where sales have fallen about 24% compared to last year. And Tesla's chief rival for the title of top electric vehicle seller in the world, BYD, meanwhile posted about 426,000 electric vehicles sold in the second quarter, which was a 21% increase for that car company over the same period last year. Tesla's stock, by the way, has lost a quarter of its value this year, making it one of the worst performers on the S&P 500, says Reuters. Tesla, of course, has slashed costs, including through mass layoffs that gutted Tesla's supercharging team, Reuters said. Tesla sales have been especially weak in Europe, with sales down 36% in May, thanks to falling electric vehicle subsidies and poor demand from fleet operators, who accounted for nearly half its sales in the region last year. And before I go, here's some feedback from you. And thank you, before I start off, once again, as always, for sending this in. Srinivas says he likes the unusual topics such as energy and agriculture and likes the fact that they are discussed with experts. He finds the views unbiased and rich in data. Piyush says he wants to see more coverage of geopolitics, and Jayachandran would like to see a section on personal finance. Do let us know if there's anything specific in geopolitics that you would like to see, or specifically within personal finance as well. For example, what aspect of personal finance would you like us to address, particularly something that you don't see elsewhere? Thanks once again, and see you soon. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.